Today, we are digging into a jobs report that, well, it sent some serious shockwaves through the financial world. It revealed some pretty unexpected cracks in what most of us thought was a pretty solid economic foundation. I mean, think about it for a second. The US economy, this global powerhouse, it's supposed to grow, right? It's supposed to add jobs month after month. But what happens when that engine suddenly starts to sputter and actually goes into reverse? Well, that's exactly the question on everybody's mind right now. And here it is. This is the number that just stopped everyone in their tracks. Negative 92,000. Yeah, that's a minus sign. We're not talking about job growth here. This is a net loss. And in a world where we're all just used to seeing positive numbers, a figure like this, it's a real shock to the system. And it didn't stop there. This was kind of the second part of a 1-2 punch. The unemployment rate also ticked up to 4.4%. So not only were jobs lost, but the number of people out there actively looking for work and not finding it, that went up too. Now, you might be looking at these numbers and thinking, they sound kind of small in an economy of millions. But for economists and investors, this is like a big flashing yellow light on the dashboard. It suggests that companies are getting a little nervous about the future, maybe slowing down on hiring, and possibly even bracing for some tougher times ahead. So that leads us to the really big question. What is actually causing this? Well, it's not just one single thing. It's really a combination of forces that are all kind of putting the brakes on the job market at the same time. See, this slowdown isn't happening in a vacuum. It's being driven by a mix of pressures, everything from higher interest rates, making it more expensive for businesses to grow, to global uncertainty, and even some very specific roadblocks happening within key industries. Think of higher interest rates as kind of like the economy's brake pedal. For the past couple of years, the Federal Reserve has been pushing that pedal down pretty hard to fight inflation. And what that does is it makes it way more expensive for companies to borrow money for new projects or to expand their teams. So a lot of businesses are just hitting pause instead of hiring. And if you zoom in, the pain points are really specific. You've got the tech sector, which, after a massive hiring boom, is now scaling back. Manufacturing is feeling the chill from weaker global demand for their goods. And of course, retail is slowing down because shoppers, feeling the pinch themselves, are being a lot more cautious with their spending. Okay, so here's where it gets interesting. You would expect the stock market to just tank on news like this, right? Well, it's not that simple. The market's reaction was really complex because, in a strange way, bad news for the economy can sometimes be seen as good news for investors. The immediate effect was a huge spike in volatility. The big market indexes, the Dow, the S&P 500, the NASDAQ, they were all over the place. And that just shows you how much uncertainty this one report injected into the financial markets. Investors were basically scrambling to figure out what it all meant. And this really captures the two-sided thinking in the market perfectly. On the one hand, you have the worry that a weak job market points to a slowing economy. But on the other hand, you have the hope that if the economy cools down too quickly, the Federal Reserve might step in and cut interest rates, which could actually give stocks a big boost. Okay, so we've talked a lot about economists and investors, but let's bring this all back home. What does a cooling job market actually mean for you, for your career, for your wallet? Let's break down the potential real-world impact. Well, the reality is a slowdown could make things a bit more challenging. Finding a new job might take longer than it used to. You could see companies being less willing to take a chance on new hires, and that rapid wage growth we've seen in some areas, well, that could start to flatten out as the competition for workers eases up. But, and this is a big but, it is absolutely not all doom and gloom. It feels more like a rebalancing. While some industries are pulling back, others are still going strong and they are actively hiring. Sectors like healthcare, big infrastructure projects, and renewable energy are still really robust and creating new opportunities. So the job market isn't collapsing, it's just shifting. So that brings us to the ultimate question that this whole report leaves us with. Are we just witnessing a temporary dip, a brief cooling off period for an economy that was maybe a little too hot? Or are we at the very beginning of a more significant, long-term change? There's a saying in economics that really sums all this up. Jobs are often the very first sign of where the economy is heading next. This report is so much more than just a number. It's a powerful leading indicator. It could be the first domino to fall, and that is why everyone is paying such incredibly close attention. And that's really the billion-dollar question we're all left with. Was this report just a blip on the radar, or is it a fundamental change in direction for the U.S. economy? The next few reports are going to be absolutely critical, and you can be sure we'll be here to break them down for you.